Welcome to my channel CA Academy, and today we are going to deal with a very important topic, that is how to identify the red flags and how to link with SA 240 and discuss reporting consequences. Okay, let's start. Imagine you are the auditor. Everything looks fine, controls are strong, management is confident, but suddenly you notice revenue has jumped 40% in March. One large journal entry passed on 31st March at 11:58 p.m. Provision for doubtful debts reduced without explanation. Now the question is this just business growth or is it fraud? This is where SA 240 becomes your weapon. Step 2. How to identify the red flags. Think like an auditor. Under SA 240, the auditor's responsibility is relating to fraud. We are required to maintain professional skepticism throughout the audit. You must think what could have gone wrong. Common red flags in fraud cases. Revenue-related red flags. Unusual spike in year-end sales, sales without dispatch documents, bill and hold arrangements, revenue recorded before transfer of control. Revenue fraud is a presumed risk under SA 240. Second type of red flags, journal entry red flags, manual entries by senior management, entries without narration, round figure adjustments, entries posted on holidays or late nights. This connects to management override of control. Then we have estimate manipulation red flags, sudden change in depreciation rate, reduce provisions to increase profit, aggressive fair value assumptions, possible management bias. Fourth type is behavioral red flags, management reluctant to provide information, pressure on audit team, frequent disputes with the previous auditors. Fraud risk is not only numbers, it's also behavior. Now, step 2, what you have to do, linking with SA 240. Okay. And CA or CMA final marks come when you connect the facts with a standard, with the case given to you. So the answer should say like this. As per SA 240, the auditor shall assess the risk of material misstatement due to fraud. Then apply. Example, linkage. Case, company records large year-end sales without delivery. Okay. Revenue recognition is presumed fraud, risk under SA 240. First point. Second point, auditor must perform additional procedures. Third point, test cutoffs, verify dispatch, confirm debtors. Always use these words, okay? Presumed risk, professional skepticism, management override, fraud risk factors, additional audit procedures, okay? These are the words which will add up to your answer. Then step 3, discuss reporting consequences. Now suppose fraud is identified. What next? At this time, if you stop the answer, then you won't get the full marks. You have to report the consequences you are going to take. Communication first. Fraud involves employees inform management. With management, inform those charged with governance. Documentation is mandatory. Impact on audit opinion. Second point. If material misstatement due to fraud is not corrected, qualified opinion, adverse opinion, or disclaimer if it is pervasive. Link with SA 705. Okay. Third, reporting to authorities. If law requires, example, Companies Act, auditor may need to report to regulators, government authorities. Confidential does not override statutory duty. Fourth, withdrawal from engagement. If management integrity is doubtful, auditor may consider withdrawal wherever permitted. Okay, so in this way you have to answer the question so that you get full marks. Okay.